Namaskar. At 11 o'clock, we have seen that Honorable Finance Minister of our country, Nirmala Sitharamanji, has presented the budget of Union Government for the year 2022-23. As we have seen these tax proposals, it is leaning towards stability. There are no much changes. Voluntary tax compliance has been encouraged, and also dishonesty has been discouraged by providing certain measures contrary to the benefit of those dishonest taxpayers. Today, at the Institute of Chartered Accountants of India, we are having presence of Honorable President C.A. Niyar Jambusaria ji. We have Chairman of International Taxation Committee, C.A. Pramod Jain ji. We also have Chairman of Sustainability Committee, C.A. Sanjeev Singhal ji. The government nominee on our council, C.A. Jalani ji, is also present. And of course, this budget will be analyzed by our tax guru, C.A. Dr. Girish Ahuja ji. I welcome all of you. Also on screen, we are joined by Honorable Vice President, C.A. Dr. Devashish Mitra ji, my colleague chairing GST and Indirect Tax Committee, C.A. Rajendra Kumar P. So friends, let us try to analyze prima facie whatever we have read after presentation of budget, the meaning, how it gets unfolded as far as this tax proposals are concerned. May I now invite Honorable Vice President, C.A. Dr. Devashish Mitra, to offer his views. Over to you, Dr. Mitra. C.A. Dr. Mitra.
Thank you very much. The Chairman, Direct Tax Committee of our Institute, Chandrasekhar Chitle, the President of the Institute, Usaria, Girish ji, Jalani ji, and Pramod ji, Sanjeev Singhal, Rajendra Kumar P, everybody else, a very, very good evening to all of you. The budget, when we heard the Honorable FM, state the budget today in the morning, first thing that I noted was this, that she was talking about next 25 years. And she was also talking about infrastructure. When she's talking about areas, that is inclusive development, productivity enhancement, and financing of investment, I think she's... You see, when she's talking about the 30 roads with kilometers, 2023, again, she's spot on. Because see, if you invest in infrastructure, country, on education front, about university, she's talking about, content with all teachers. When she was talking about this, remembering our that India has. We are talking about enabler, and she's now talking about 4 or 5 years. She's talking about e-passports. She's talking about one nation, one registration. She's talking about post office being under CBS. And then she's talking about introduction of rupee by RBI 22-23. You see, use of technology for the development of that is excellent. Girish is there, and there have been quite changes in the direct tax. Now you can find an updated return within 2 years, end of the assessment year. The surcharge on rates have been reduced from 8% to 7%. And there have been a lot of changes. Section 70, Section 48, Section 115H have been introduced regarding digital assets, where ECB starts to sell virtual deals 20%. And those of us who are attending this seminar would find that deliberacy is very enlightening. Here, let me just tell you, as chartered accountants, I am extremely proud to be a pillar of the economy. And this word, pillar of the economy, has been used to describe us in none other than the minister in the international conference just a few days back. Those of us who are interested in giving their comments, please share your comments in our post. So thank you very much, and everybody else.
Thank you, Vice President, sir. We have with us Honorable President ICI, who is also noted expert of taxation, and also he comes from industry. So we would be very eager to listen to address by Honorable President C. Nihar Jambusaria ji.
Thank you, Chitlaji. Respected Vice President of the Institute, C.A. Dr. Devasis Mitra, Chairman and Vice Chairman of Direct Tax Committee, C.A. Chandrasekhar Chitle and C.A. Satish Gupta ji, Chairman and Vice Chairman of International Tax Committee, C.A. Pramod Jain and C.A. N.C. Hegde, Chairman and Vice Chairman of Indirect Tax Committee, C.A. Rajendra Kumar P. and C.A. Susil Kumar Goyal, my colleague in the Council, C.A. Sanjeev Singhal, and particularly C.A. Dr. Girish Ahuja. Ahuja ji is doing this for all of us for so many years. We have with us our government nominee, Dr. Advocate Vijay Zalani ji. Since this talk has been organized particularly by these three tax committees, the focus will be on the indirect tax proposals as well as international tax proposals. But if we look at the budget, I think the approach is, it is a growth-oriented budget. There is a lot of focus on infrastructure, exports, investments in India. There is also focus on disinvestment, encouragement to farmers. Now this is budget in general, and there are so many other aspects. When it comes to direct tax, as the Chairman Direct Tax Committee rightly mentioned, the focus is on self-compliance. The fact that the new provision for updating return on payment of additional tax within 2 years from the end of the relevant assessment year is allowed, shows that if anybody is soul searching, one can update the return, or sometimes if something is missed out, then also the return can be updated within 2 years. There is a reduction in MAT rate for cooperative societies. I think substantially this will help cooperative societies, because some of the cooperative societies have become like big corporates, and it will be a big relief to them as the MAT reduction is to the tune of 3.5%. There is a reduction in surcharge in respect of cooperative societies' total income between 1 crore and 10 crore, extension of deadline for setting up startup for availing tax benefits, the tax relief to both startups and manufacturing companies has been extended. Particularly, I think very unique feature in the budget is taxation of digital assets. They have mentioned cryptocurrency by way of an example, and 30% rate is very high. Perhaps it shows discouragement for use of cryptocurrency. Litigation management system will be introduced. There is cap on surcharge for AOPs, cap on surcharge on long-term and short-term capital gain, and so many provisions are made in the tax laws. But if you look at the provisions, substantially it does not provide direct relief to the small taxpayer. Perhaps that is not the approach of the government, and in that sense, today we have expert on direct tax to discuss all these provisions in greater detail as he has done in the past. We have experts on indirect tax, international tax. Let us see what is in the fine print of the finance bill and understand and decide our strategy on making post-budget memorandum to the government. Thank you so much for inviting me.
Thank you, Mr. President, sir. And as Mr. President, sir, before concluding has stated that we will also be making post-budget memorandum to the Finance Minister, to the CBDT and to the GST Council. So I would also welcome any suggestions from you. You may send the mails to the Institute. As you are aware that in these days, number of MNCs are operating in India. Indian enterprises are also in transaction with various multinational entities. So our institute has made a separate committee for the purpose of international taxation, and it is headed by my colleague, T.A. Pramod Jain. Over to you, Pramod.
Thank you, Chitra sir. Honorable President of ICI, T.A. Neha Niranjan Jambusriya sir. Honorable Vice President of ICI, who is virtually here, CA Dr. Devashish Mitra sir. The Chairman of the Direct Tax Committee, Chandrasekhar Chitle sir. Vice Chairman, Satish Gupta ji. Chairman of the GST and Indirect Tax Committee, who is also virtual, CA Rajendra Kumar P. And Vice Chairman Sushil Gupta ji. Our government nominee, CA Vijay Jalani ji. Our Chairman of the Sustainability Development Board, CA Sanjeev Kumar Singhal ji. And of course our Guru, I would say not a digital asset, virtual digital asset, but of course the greatest assets for the whole CA fraternity, Dr. Girish Ahuja sir. And friends, I'll be talking about certain amendments which has been proposed today by Honorable Finance Minister Nirmala Sitharaman ji on the international taxation. And to start with, I'll talk about this virtual digital assets if I talk about, because if I talk about virtual digital assets, it could be applicable domestically as well as internationally, because mostly these digital assets are stored internationally. So if I talk about this, yes, some certainty have been brought in for the taxation aspects in this budget, wherein a new section 115 BBH has been introduced, where, as said by President sir right now, that yes, 30% blanket tax is there, no expenditure allowed, only the cost thereof is allowed. So that would be tax, and this virtual digital asset would not only include the cryptocurrency, but also the very upcoming NFTs, that is the non-fungible tokens, which is growing day in, day out, or any other similar asset for that matter. And also they have brought in withholding provision thereon, the taxation TDS provision thereon under section 194S, wherein the TDS would be at the rate of 1%, irrespective of the amount in case of other than individual and HUF. And in case individual and HUF, they are making a payment, then in that case, if they are having a business income, then the limit would be that when they have to deduct TDS would be in case their turnover exceed 1 crore rupees, or in the profession 50 lakh rupees. But if they are not having any business income, in that case, the limit would be again 50,000 rupees. In both the cases, 50,000 rupees. But in all other cases, the limit would be only 10,000 rupees. So all these have been brought in under this TDS provision, which is again going to be, I suppose, followed world over India has been a leader into this in some sense. Also, to promote the gift city, the IFSC, certain exemptions have been given to the non-residents under section 10, 4E, 4F, 4G, the newly introduced, and ATLA they have given that in case the income is due to the transfer of offshore derivative instruments or over-the-counter derivatives, then that would be exempt, or royalty interest or on account of lease of ship, that also would be exempt to the non-residents. And also in case of portfolio of securities or financial products or funds managed or administered by any portfolio manager on behalf of such non-resident, which is maintained with the offshore banking unit in IFSC, that would be exempt. And also income arising from the transfer of an asset being a ship which was leased by the unit of IFSC, that would also be exempt for the non-residents. Though the new exemptions have been brought in for these non-residents in the IFSC, but certain exemptions which were there for the individuals who were in the service or consultants who were on assignment for the duties in India under section 10, subsection 8, 8A, 8B and 9, they have been withdrawn with effect from assessment year 22-23. So they have been withdrawn. Another important amendment here is that we all know that if in case an Indian company was having a shareholding above the prescribed limit, which is I suppose more than 26%, and they were having certain dividend income from them, so that were taxed at the rate of 15% under section 115 BBD. Now that 115 BBD has been omitted, so that has been abolished. So it would be taxed, of course, at the normal rate at which the company is taxing, which could be 30%, 25%, 22%, whatever the tax rate is. But yes, if they declare the dividend, then of course the benefit of section 80M was available and that continues to remain available. So that benefit of 15% of that tax has been withdrawn. Also, there was no provision per se for a revision of an order of a transfer pricing officer. Now that has been brought in and added into section 263, where the principal chief commissioner or the chief commissioner or the principal commissioner or the commissioner, they can, of course, following the 263 procedure, they can revise those orders. Also, going for the faceless assessments, even the transfer pricing provisions and the DRPs were to be made faceless by March 22. To stabilize the faceless working, they have extended this period by another 2 years. So they would be done by March 24 now. And another very important amendment which has been made for international taxation is that in case a person was required to deduct tax under section 195, actually it was not required to deduct tax under section 195 but had deducted and paid that amount. So it had to go for an appeal under section 248. And there was no specific provision for the refund also they had to go for an appeal. Now they have provided under new section 239A, where they can file for a refund. After paying the tax within 30 days, they can go for a refund, and consequently the appeal process for section 248, that has been withdrawn. So changes are being made to streamline the procedures and certain exemptions. Thank you very much.
Well, thank you, Pramod Bhai. As we are aware that United Nations has announced 17 Sustainable Development Goals in order to equip our profession and professionals with advisory and consultation services rendering to industry and others on these particular goals, and also considering requirement of our economy regarding sustainability. The ICI has constituted a separate committee for this sustainability, a board, and it has been ably headed by CA Dr. Sanjeev Singhal, and there are certain provisions which have been tabled in this particular union budget. So I would request Sanjeev Bhai to inform us about those changes.
Thank you, Chakleji. The Honorable President of the Institute, CA Nehar and Jambu Sariaji, the Honorable Vice President of the Institute, CA Dr. Devashish Mitra ji, the Honorable Chairman, Direct Tax Committee, Chandrasekhar Chakleji, Vice Chairman, Satish Gupta ji, the Honorable Chairman, Indirect Taxes Committee, Rajendra Kumarji, Vice Chairman Sushil Goyalji, Honorable Chairman Committee for International Taxation Pramod Jainji, and Vice Chairman NC Igleji, and of course the very, very eminent tax speaker, our Guru, Dr. Girish Ahujaji, and Government nominee, Advocate Vijay Jalani-ji. The Union Budget 2022 has focused on reforms towards building a sustainable economy. The budget has a long-term vision with some important announcements for taking the country on road of sustainable growth and meeting the Sustainable Development Goal 2030 agenda. The Honorable Prime Minister of the country in the Davos 2022 has given the 5 principles under Panchamrit. And basically the budget has also covered all important aspects for accelerating the sustainability agenda like energy transition, climate action, clean and sustainable mobility, solar power, circular economy, digital university, transition to carbon neutral economy, encouraging sustainable and climate finance. The Honorable Finance Minister has strongly highlighted urgency of energy transition and climate action. Budget speech mentions that the risk of climate change are the strongest negative externalities that affect India and other countries. As the Honorable Prime Minister has said at the COP26 summit in Glasgow, November 21, what is needed today is mindful and deliberate utilization instead of mindless and destructive consumption. This budget has reiterated that the low carbon development strategy as enunciated in the Panchamrit announced by the Honorable Prime Minister is an important reflection of our government's strong commitment towards sustainable development. Globally, emerging view is that the transition to a climate neutral society is both an urgent challenge and an opportunity to build a better future for all. Budget has addressed this urgent need of transition to carbon neutral economy. Members may know that the per capita carbon emission in India is 1.9 ton per annum, and India accounts for 7% of the carbon emission that takes place globally. The budget states that 5 to 7% biomass pellets will be co-fired in the thermal power plants, resulting in the CO2 savings of 38 MMT annually. That's going to be huge. This will also provide extra income to farmers and job opportunities to locals and help avoid stubble burning in the agriculture field, which also leads to a lot of pollution, as we have seen particularly in Delhi NCR. Saving energy is an important aspect of energy management. Hence, energy efficiency and savings measures will be promoted. This will be done in large commercial buildings through the energy service company business model. It will facilitate capacity building and awareness for energy audits, performance contracts, and common measurement and verification protocols. Four pilot projects for coal gasification and conversion of coal into chemicals required for the industry will be set up to evolve technical and financial viability. A very important step that's been taken in sustainable finance is the introduction of the sovereign green bonds. As a part of the government's overall market borrowings in 22-23, sovereign green bonds will be issued for mobilizing resources for green infrastructure, and these proceeds will be deployed in the public sector projects which will help in reducing the carbon intensity of the economy. Budget has also introduced the concept of central bank digital currency, which will give a big boost to the digital economy. There's also a new initiative on the digital university, which will be established to provide access to students across the country for world-class quality universal education. And of course, this will also help in the sustainability measures. Clean and sustainable mobility has been given prominence by promoting a shift to use of public transport in the urban areas. And this will be complemented by clean tech and governance solutions, special mobility zones with zero fossil fuel policy, and the electric vehicles. Further, the battery swapping policy has also been introduced, which states that a battery swapping policy will be brought out and interoperability standards will be formulated. So thus basically the service provider will be able to offer battery or energy as a service rather than a product, which will also actually help people reduce their expenditure. Budget also mentions sunrise opportunity, which includes green energy and clean mobility system as having immense potential to assist sustainable development at scale and modernize the country. And solar power has been recognized as an important energy source, and to facilitate domestic manufacturing for the ambitious goal of 280 gigawatt of installed solar capacity by 2030. The concept of circular economy transition has been introduced, which is expected to help in productivity enhancement as well as creating large opportunities. ICI welcomes all these strategic initiatives introduced by Budget 2022 for taking forward country's progress and transitioning to low carbon economy. Sustainability Reporting Standard Board of ICI has taken initiatives in sustainability domain under the leadership of our Honorable President C.A. Jambusariyaji and the Vice President C.A. Dr. Devashish Mitraji for strengthening sustainability reporting of corporates, developing technical literature, capacity building, partnering with regulatory bodies, and also creating awareness on SDGs. And ICI will actively work with the government in achieving the SDG agenda of the country for 2030. ICI has also released Sustainability Reporting Maturity Model version 1.0, and looking at the future, probably, the Honorable President already advised, and the Institute has already instituted two international awards on climate change and gender equality, and 10 awards in the sustainability reporting. And the first set of these awards will be presented on 9th February 2022. Initiatives like ICI Sustainability Literacy Drive, Champions of SDGs, and Carbon Footprint Challenge have been taken by ICI for raising awareness among members and students. Thus, the ICI is truly partnering with the government. And going forward, the main focus area will be to help businesses in integrating sustainability in both business practices and reporting, and thus truly harness the power of non-financial reporting for both environmental and societal cause. And the ICI really commend the Honorable Finance Minister for giving sustainability such a major focus in the Union Budget 2022. Thank you.
Thank you, Sanjeev. Friends, as you are aware, that profession is thickly involved in dispensing services in the area of GST and other indirect taxes. And we have a committee for those indirect taxes, ably spearheaded by my council colleague, C.A. Rajendra Kumar P. Over to you, Rajendra Kumar ji.
Thank you, Honorable Chairman of the Direct Taxes Committee, C.A. Chandrasekhar Bhai Chittale, Most Honorable President, Honorable Vice President, C.A. Sanjeev Singhal ji, C.A. Pramod Jain ji, Dr. Vijay Jalani ji, our Guru, Ahuja ji, and all other members who are watching this live webcast from the Institute. Friends, as you would have heard today, the Honorable Finance Minister was stressing a point that the GST collections for the January have been the highest since the introduction of GST in 2017. And invariably, friends, if you see, the indirect tax proposals are presented at the last. And I, as the chairman of the GST Indirect Taxes Committee, is also speaking at the end. This is because of the fact that these are taxes which are indirect in nature. This particular budget, as far as indirect taxes is concerned, focuses mainly on the customs aspects. Why? Because GST budgets are now monthly. With the GST Council meeting, the amendments proposed by the GST Council, the rate changes proposed by the GST Council are then carried on a monthly basis. So, in sum and substance, friends, there's nothing called as an indirect tax proposals in the union budget after the introduction of GST, barring last year when certain amendments in the CGST Act were proposed by the Honorable Finance Minister, which became the law. Now, in this particular budget, there's nothing secret now in GST, because whatever GST Council proposes, the government either comes out with the notifications or with the amendment in the Act per se, which they have done this year also. They have proposed such amendments in the input tax credit, which was already discussed in the GST Council. The government have now come out with the concept of input tax credit availed and utilized. It's a very, very welcome step, I must say. And I would stress here, my friends, that this particular proposal was made by the GST and Indirect Taxes Committee of ICAI, that the concept of availed and utilized must be recognized. It has been a practice recognized since the times of ModVat credit, and SENVAT credit, and service tax credit, and finally merging with the SENVAT credit rules 2002 and 2004 onwards. This proposal has found favor, which was very strongly advocated by this committee, the GST and Indirect Taxes Committee of our institute. The proposal is with respect to if ITC has been utilized, in fact rather availed but not utilized, and then it is reversed, the interest was payable. But now comes the fair proposal that if the input tax rate is availed and only utilized, only then the interest liability triggers. Otherwise, no interest liability triggers, friends. This year, as I said, the thrust of the budget, is on the customs fund. The government of India is conscious that the Make in India scheme should be swiftly implemented. And with WTO not being active, I would not call defunct, but not being active, countries like India are left to their own to decide on the increase or decrease of customs duties, barring the trade barriers that prevail across the world. In this context, friends, there have been about 100 to 150 products in which there has been a change in the structure of the customs duty per se. This program will not be sufficient to discuss each and every product on which the customs duty impact has been there. But I would certainly mention a few products which will certainly interest you. These are something which require our considered views. For example, products like the mobile phones, earphones, headphones, loudspeakers, multi-modal speakers, meters, printed circuit boards, solar cells, solar modules, all these, the rates of import duties have been increased, which means that they become effective from today midnight itself. You don't need the finance bill to become an act and then notified. No, all the tariff amendments take effect from today midnight itself, esteemed friends. Likewise, if you see a small product, it's something which doesn't catch our eye, on which there is a double time increase in import duties, umbrella. Now, I don't know what is the rationale behind all these, but then I would restrict myself here now because there are many other proposals to be discussed, and we in the GST and Indirect Taxes Committee have an exclusive program tomorrow with the board member of the CBIC, Mr. Nagendra Kumar IRS, coming in and deliberating on various factors as proposals proposed in the indirect taxes, and we also have good speakers tomorrow. So I would stop here and only say that the budget has just touched upon indirect taxes proposals, and with a stress on Make in India being there, the import duties have been largely tinkered with, mainly because of nil constraints of WTO being operational for about almost 10 years. Thank you very much.
Thank you, Rajendra Kumarji. Friends, we are also joined by my council colleague, CA Rajesh Sharma, at this juncture. Now, we would be eager to listen the changes in direct taxes. As we are aware, the more the changes, the more complications. Therefore, as we witness, the government is proposing very limited changes in the arena of this direct tax. Now, if you analyze these changes, basically there were certain judgments rendered by high courts or other forums which did not go in tandem with the thought process of CBDT with which a particular provision was brought about. And therefore, they have provided certain clarificatory amendments where they have underlined and amplified the intention of bringing in that particular provision to overcome the judgments which were not in line with their thought process. There is a set of amendment where more information is tried to be garnered in the interest of collecting information on particularly taxable income. And thirdly, there are a number of administrative amendments. Like in first segment, say section 14A, where it stated that if there is any expenditure to earn income which is not liable to tax, and then the expenditure was sought to be disallowed, there were arguments that where there is no such tax-free income, maybe disallowance will not flow. Or in case of cess, education and health cess, there was an interpretation accepted by the court that what is to be disallowed is only tax, and cess, based on certain CBDT circulars and commentary, they stated that is not a part of direct tax. And therefore, whatever cess that was paid on the tax outflow, along with tax outflow, that has been allowed as a deduction against while computing business income. So such type of certain judgments which came against the intention of the CBDT, they have tried to set right the position as they desired. On garnering resources, as you are aware, like in case of salary, perquisites are taxed. In case of business also, wherever a businessman or a professional is beneficiary of a perquisite, that is also taxed. However, information was not coming to the income tax department that how many such perquisites are dispensed with. So they have provided provision of TDS on business perquisites, and also now this virtual asset taxation has been brought about. Now cryptocurrency and such other virtual assets are there. There was no clarity about taxation, so they have made it a certainty and brought the provision. But again, to garner the information, they have provided tax deduction at source in respect of transactions in virtual assets. In respect of administrative, maybe while compilation of return, there may be certain errors, and they have been given second opportunity to the taxpayers. If they notice such errors, maybe within a period of 2 years, they can correct those errors. Of course, whenever they correct those errors, it will not be free of cost. It will cost them to the extent of 25 to 50% of the amount of tax, depending upon the period when they have corrected this error. But then it is welcome that some opportunity to rectify the errors has been provided in the law. In respect of various other matters like faceless assessment, it has been overheard and new provisions of faceless assessments have been brought about. Maybe again taking view from the court decisions, the anomalies have been tried to be ironed out. So these are the various facets of the amendments which have been brought about. Friends, whenever we have any meeting in the ICAI on direct taxes, we don't call for act or rules. We requisition presence of CA Dr. Girish Ahuja, because if he is present, we do not require the copy of any act or rule as far as income tax is concerned. Whenever we confront any difficulty, any issue, he is our guide who is always guiding the ICI and the profession on the matters of direct taxes. So today also, as usual, we have invited CA Dr. Girish Ahuja ji. He had to address at Parliament also, but considering our program, he has adjusted his time schedule, and I am really thankful to you, sir. And my Vice Chairman, CA Satish Gupta ji has also joined now. So all of us are eager to have analysis, prima facie analysis, I would understand, of these proposals in direct tax arena. Over to you, sir.
Good evening to everyone. Honorable President of the Institute of Chartered Accountants of India, just left for a minute, CA Nehal Jamusaria ji. Vice President on virtual mode, Dr. Devesh Mitra ji, Chairman of the Directors Committee, Chandrasekhar Chetani ji, Vice Chairman of course, Satish Gupta ji, Pramod Jain ji, Chairman of the International Committee, Sajeev Singhal ji, and Rajesh Sharma ji, and above all, my student, of course, of the government nominee to the Institute Council, CA Vijay Jalani, now I will say Advocate Vijay Jalani ji, the other dignitaries sitting in front of me, ladies and gentlemen. Well, friend, let me tell you, very difficult budget. 84 amendments, very technical type of amendments. It cannot be summarized in such a short time. And I have also not read it. I have not read the law. I have to read the law and then explain it. If I had been there in the Act, I would have immediately started with that. It is a bill, not yet passed, just heard, just listened to them, and I'm coming to that. Let me tell you, so many changes have been taken place which were there earlier, and now they have changed again. Those made changes with that. They have brought the change in the meaning of slum sale under Section 2, Clause 42C, saying that earlier it was said as a result of sale, then they say by any means. But they said without assigning the value to any asset or liability, the word ref was on account of sale. The word should not have been on account of sale. They have amended it on account of transfer. But the most important change, Section 2, Clause 42C, 2 Clause 47A inserted, 115 BBH inserted, Section inserted 194S inserted, and this is all regarding virtual digital assets, or in any form, whether any information, whether any code or any token which has been generated, and if there is a profit on account of that cryptocurrency you transfer, and it may be cryptocurrency, it can be in any other form, whatever name called. If you transfer that, Section 115 BB says there will be, if the total income includes any income referred to in Section 2, Clause 47A, the meaning of virtual digital asset, given under Section 2 Clause 47A. The meaning is given under Section, Mr. Pramod Jain can check whenever he wants because it is only a new thing. I've just read it, I might have missed something. So Section 2 Clause 47A has given me the meaning of virtual digital asset. Taxability is under 115 BBH, saying that where the total income includes any income referred to in Section 2 Clause 47A relating to virtual digital assets, such income will be taxable at a special rate of 30%, and all other income shall be taxable at the whatever special rate or normal rate is there. And because you transfer this asset, virtual digital asset, there is going to be a profit. I have already said at 30%, but there will be a TDS on that amount. The TDS section has been introduced, as rightly pointed by Mr. Pramod Jain, at the rate of 1% of the amount of the profit, the difference between the profit and in whatever said inside section also, let me tell you, under 150 BBS they have said, no deduction whatsoever will be allowed on account of any expense except the cost of acquisition or any allowance or any other expenditure, and no setup will be allowed of this income with any other loss or this loss. If there is a loss of the cryptocurrency, that will not be allowed to be carried forward. Only gain, loss they will not give you. Only gain, only gain, and gain will be taxable under 115 BBH. If there is a loss, this loss will not be allowed to be set up. If there is income, loss under other head, that will not be allowed to be set up from this income, and this loss will also not be allowed to be carried forward. So what I am telling you, this crypto, virtual digital asset is now taxable, very clearly said, at the rate of 30%. At the rate of 30%, and this is a special rate. Please note, this is a special rate given because chapter 111 onwards are special provisions and special rate for certain type of income. So that income will be covered under 115 BBH. Be careful about that. It is now very clear. People who are interested in crypto this thing or this type of a digital asset or this type of a digital asset, sir, will it be a long capital gain or will it be taxable or will not be taxable? They have made it very clear. It is going to be taxed at the special rate of 30. 30 does not mean only tax. All surcharge cess will also be there in addition to normal rate of a special rate of 30%. So that is what I wanted to tell you. Next point. If you remember, please add.
Suppose there are two digital assets. On one there is a gain, one there is a loss. Will that loss be adjusted?
Okay. Let me tell you, they have said no expenditure, no loss shall be allowed to be set up from such gain. But if there is a gain of each other, then of course why should it not be allowed? According to me it should be allowed. Have you noticed that point? According to me it should be allowed. You are talking about the proviso which is given here. Let us read out this.
Subsection 2. Subsection 2 says,
please read the section.
No set-off of loss from the transfer of the virtual digital asset computed under clause A of the subsection 1 shall be allowed against income computed under any other provision of this act.
Any other provision.
Of this act.
Yeah. Of the act. So any other provision, if there is a law, you can't set up on any other income.
So they are talking not in aggregate, they are talking about each virtual but they
no where it is. You are not allowed to set up loss from any other head of income. You are not allowed to set up loss or if there is a loss, it is not allowed to be carried forward. If there is a loss, you cannot set it from any other head. But no other loss can be set up from this head. But according to me, there is no possibility of saying that in one case you have a income, another case you have a loss, pay tax on income and don't pay tax on loss. I don't get it. I don't agree with that. I don't agree with that. That is transaction earned in a year. If it is loss or income, first then we have to aggregate that and then calculate the final income under it. Because it says where the total income includes. Right? Under income refer to under that. So total income will be calculated. That income will be only net off after that each other. According to me. Let's see it. Let us see in detail. But this is highlights. I have not gone into detail. According to me, certainly it will not.
Sir, if it could be a capital gain taxable at 30% or what?
No, it's not capital gain at all.
Which head?
It's other sources here. Where it is written it is capital gain. Why if it is capital gain, it should have been caused with a capital asset. So the moment it is capital gain, it should have been a capital asset. They have not used the word capital asset.
56.
It will be covered under 56. It cannot come under capital asset, according to me. Because if there is capital gain, they should have included this specifically in the capital asset. The definition has been given in 247A. I'm not denying. But 247 it does not talk about this asset. For capital asset is 240. 247 is transfer, not rental. What is not regarded as transfer. 247 is not talking about that. They are giving the meaning of virtual digital asset. Because that point has to, after T comes B. After T comes B. That is the according to the alphabet. So that doesn't get into the 247A has nothing to do anything with the capital B. It is only a definition and clauses to be added. So ABC being alphabetical, T was transferred. After T what comes, sir? V. V is virtual digital asset. Definition of virtual digital asset.
So in this case, sir, in case it is income from other source and then
it is not income under 4X that where it goes. Other source.
Other source. So other source.
But I think that if it is income under, it can't be income under salary. It can be income under the house property. It is not your business also. If at all it is having business income should have been there. It is not a case of capital gain. Ultimately it comes under the last head of income, the residual.
So that's why there could be an issue. That in case there are two different assets, one gain, one loss, the issue could be there of non-adjustment.
When you calculate income, let me tell you of two transactions of the same nature, even in speculation, if there is a speculation loss and a speculation income, they are allowed to be set up with each other.
Other source not.
Other source, let me tell you, first you have to calculate the income from that. We can discuss that. We can discuss. I'm not denying that fact. But when two academicians discuss each other, there will be many other issues also in that. But according to me, logically, it should be not from any other. Agree, if it is a total loss, that is not allowed to be set up. But again, I will not say that you are wrong. But I will also not say that you are correct, 100%. We will discuss this in the due course of time. I'm not denying that fact. It's a wonderful point which you have raised, and we should also discuss.
Since you said that there can be various other issues, it is also possible that a person may hold this digital asset as a capital asset.
They have not stocked in the, you remember 150 BB, where the total income includes any income referred to in section 68, 69, 69 ABCD. Here, have they written that where the total income includes any business income of nature of this?
No, my limited point, have they written that?
Where the total income for SSC includes any income from transfer of the virtual data.
Income from the transfer. And transfer comes either in the chapter. Transfer includes sale, exchange, relinquishment, settle, but it is not a capital asset. It has not been told. That's what 30%.
No, exactly. My point is not on taxation. My point is on availing certain exemptions by purchasing a residential house or investment. So whatever is available to capital gains, maybe if this is treated as a capital asset, perhaps that can be an issue whether I can.
The moment it is brought under capital asset, then the problem will be long term, short term. The problem will be this. It is not there.
And that's why in the computation of 48 also they have.
And they have said 30. They have not said it will be short term, it will be this, it will be long term, it will be this. So it cannot come under capital at all. Have you agreed with me?
Yes.
So can I proceed? Okay, sir. Let's start. Next point. Let me tell you. Section 1023C talks about there are some clauses IV, VI, VIA. IV is notified charitable institutions, and V is notified religious trust. VI is educational institution approved by where the gross receipt exceed 5 crore. VI is in the medical and institutions. This is there. Now 85% you can spend and 15% you can accumulate. But if you want to accumulate more than 15%, when you are under 11-12 section, you have to file a form under 10A form under 11.2 and you can accrue this income for a period of 5 years. Agreed, sir? This side of the thing was not there in 1023C. It was not there. It was there, you can accumulate more than 15% in a mode given under 11.5. But they never said that you have to file a form, no requirement of filing a form. They never said that you have to accumulate for a period of 5 years. Nothing was mentioned there. Now, same provisions which are there under section 11.2 have been reproduced under section 1023C by incorporating a proviso. Am I right, sir? By incorporating a proviso, they have said, look here, that if you want to accumulate more than 15%, you will have to file a form, and that is requisite form, and that too will have to be filed on or before the due date specified there. And let me tell you, this amount has to be accumulated for a period of 5 years. The same provisions, 5 years, that if you are not able to utilize this 5 year or see this to be accumulated or you don't keep it under 11.5, all those conditions are there. But one more point, very important, very, very important. Earlier, the 5 year period was there, but if you could not utilize in the period of 5 years, it was treated as the income of the 6th year. It was the income of the next year. That has been deleted both under section 11.12 as well as under section 1023C. Now, 5 year means 5 years. If you are not able to spend that amount in the period of 5 years, it will be taxable in the 5th year itself, not the 6th year. Earlier, the very one year it will be taxable in the year following a period of 5 years. That word has been deleted. Be careful, because I have seen everybody saying that it is possible for 6 years. Earlier it is there. Now you have to spend this money within a period of 5 years. If you don't spend within a period of 5 years, you will have to pay tax in the 5th year itself. And now 1023C is exactly for this purpose. There it is 11.2 and 11.3. Remember, sir, 11.2, 11.3. Now 11.2, 11.3 have been brought in the form of proviso. under section 1023C. Be careful with that. That is very important. You should be careful about this section about 1023C, 11, 12, 13. And another point. There was a condition at 12A that you have to, if your total income exceeds if your gross receipt exceeds the maximum before taking the exemption under 11, 12, it exceeds the maximum which is chargeable to tax, you have to get your accounts audited and submit the report within in the prescribed form on or before the due date. Am I right, sir? But now they have said they have to know that you should maintain and keep the books of accounts. They said you get your accounts audited. So for years it has been going on. Now they said first maintain and keep the books of account and then you can audit it. That point is also very important. Another point, one was incidental to the attainment of the objective of the trust. And if it is incidental to the attainment of the objective of the trust, it is there. Now they said if it is not incidental to the objective of the trust and there is some violation, now the word used is specified violation. The violation will be taxable at the special rate, which is given under section 115 BBI. Am I right? BBI. That new section has been inserted for section in after 115 BBI. So be careful. There are many changes in section 1023C. It is lengthy one, but of course reproduced from the section 11, 12, 13. That has to be very careful about that. And some specified violation has been given in proper form. And that specified violation will take you to be taxed at the maximum margin rate that is at 30% under section 115 BBI. That point has to be kept in mind before you proceed anything. Let me tell you section 17 subsection 2, meaning of perquisite. And there is a proviso in that, in the meaning of perquisite, that if the amount is spent by the employer by giving you a medical reimbursement, a medical facility, it is hospital maintained by the employer, or it is the treatment is a government hospital or a hospital approved by the government for their purposes, or it is for specified ailment or disease. Now one more clause has been added, C clause, that if this benefit has been given for treatment of COVID-19, then such treatment expenditure incurred by the employer or employee or his family, the meaning of the family remains the same. It will not be treated as perquisite. That will not be treated as perquisite under section 17(2). It will not be treated as perquisite. But wait a minute. Simultaneous amendment in section 56, subsection 2, clause 10. What about the expenditure which is incurred by the employer on the treatment of employee and his family member, or he has given some compensation at the death of the employee to the family members? What will happen to that? First thing is 56(2)(10) says that if the employer has incurred any expenditure or the amount has been incurred on COVID-19, it will not be covered under 56(2)(10). And secondly, if the amount is paid ex gratia by the employer to the family of the deceased, in that case, it will not be covered under section 56, subsection 2, clause 10, as it says when you receive a sum of money exceeding 50,000, it is taxable under 56(2)(10). But if you are receiving from employer, an employer has given this benefit amount, ex gratia amount, after the death of the employee, and it is be received by the family member, no amount will be taxable. Retrospectively not. And secondly, if somebody, what happens is the friends, the relatives, the other employees, contribute and give the amount to the family of the deceased. We have also done many places it has been done that they join together to help the family of the deceased because they are poor and suddenly the death has taken place. They say if it is up to 10 lakh, we are not going to treat it as 56(2)(10) taxable. But if it is more than 10 lakh, I'm really surprised. The law is not clear. It appears that if it is more than 10 lakh, the whole amount will become taxable. It should have been, if it is 10 lakh, and if it is more than 10 lakh, up to 10 lakh exemption should have been given, and the balance should have been made taxable. But the language at this stage, well, we will try and go for post-budget amendments that it should not be taxable in that case. So that point was very important. I just wanted to tell you about that point.
It's only in this case,
Earlier, state governments wanted to show lesser deaths on account of COVID. So, in certain cases, it is possible that certificate may not be available to the employee or family members that he has expired out of COVID. So, in those cases, there may be certain difficulties.
Yes, it is only for COVID-19. Then only. It is only for COVID-19.
So, we have to ensure that those.
You have to ensure that a certificate has to be obtained that the death is due to COVID-19. Otherwise, they will not give you this benefit. They will not give it. And then everybody will start doing this. You have to get a certificate that the death is due to the COVID-19. Coming to another point. Sir, 68 section, there was a proviso, provided that if you have received any sum as a contribution of the capital, then you have to give the source of that. Now that proviso which is there has been switched to provide a second proviso. A new proviso has been inserted before. It's not that that proviso is not there. That proviso which was there, it was called provided that. That proviso has been treated as provided further that. It remains the capital or any sum you have taken in the case of a company. But they have inserted first proviso before that, and it says that if there is any loan or if there is any borrowing or there is any other credit in the books accounts of the SSC, you have to give the source of the source. Source of the source that you have received loan. Let's say I have received loan, Mr. Pramod Jain. I will have to see the show what is the source of Mr. Pramod Jain. And it is not only for every person, I have received money from NBFC, let's say. I have borrowed from them. Probably, it appears, no exception is given, that I have to give the source of the NBFC also from there. Probably for banks that have received, they may not ask it. But the proviso has been inserted saying that you have to give the source of the sum. You have taken a loan. I have taken a loan. I used to say, this is the source from which I have taken a loan. Now you have to say, what is the source of that lender who has given you that amount? Am I right, sir? So this is also very important. Section 68, the proviso which was provided, first proviso has been made, second proviso, and one proviso has been inserted before. Somebody was telling me that proviso has been deleted. No question. That proviso remains. But that proviso, first proviso has become second proviso, and before second proviso, first proviso has been added. And that for every person who has taken loan borrowing, not for company. Every person who takes a loan or borrowing or any other credit in the books of account, because books of accounts is necessary here. Section 68 talks about found credited in the books of account. Am I right, sir? Found credited in the books of account. That point should also be kept in mind. I'm telling you. Next point, small change. 80CCD. You know, employer can contribute 10% to the national pension scheme. But in the case of central government employee, it was raised from 10% to the 14% by the employer contribution, but only for central government employees. This time, they have given this benefit to the state government employees also. The employer of the state government, that is the state government, who is the employer, can contribute 14% instead of 10%. Earlier, it was only for central government, they could contribute 14% for their employees in the national pension scheme. Now it is for both central and state government. 80CCD. Next, 80DD. You know what happens is, you have a dependent with physical disability. Disability may be severe disability or otherwise disability. So what we used to get is insurance of that physical person. And I used to make payment of that. As for the insurance premium, contribution for the insurance premium. And this contribution was allowed as deduction under 80DD. But section 80DD subsection 2 used to say that if after the death of that person who has got them insured, if the disabled person gets the annuity, that will not be taxable. But now the point is, sometimes what happens is that person is alive. Those who have got it insured, I suppose there is some dependent on me. I have got insurance for him. I am alive. They said nothing to me. Still I am alive. He gets what you call any annuity that will be taxable in the hand. He should get the annuity only after my death. That point was there. Now they said during the course of their death also, even if the person has not died, till the annuity can be received by the disabled person, and it will not be covered, provided, please don't, it will not be covered, provided I have completed the age of 60. completed the age of 60, and if it has been contributed by the member of the HUF for the deceased, the person is completed the age of 60. That point was for 18, DD, 80 IAC, the minor change, startup was getting the deduction for a period of 3 years, consecutively for a period of 3 years for the startup as a 100% deduction. But that was up to if they startup by 31st March 23. This has been extended for 1 more year. That point I wanted to tell you. This is the benefit we have got it. Next point. Coming to cooperative societies. You know the cooperative society can be taxed at 2 rates. There are 2 normal rates. One is normal rate, which is first 10,000, 10%, next 10,000, 20%, balance 30% plus surcharge plus. Another is 115 BAC. In BAC, the rate is what you call 22% like company plus surcharge 10%. There is no change in 115 BAC. No change. That remains 10%. But what was the surcharge when you were covered under the normal provisions or normal rate of tax? That surcharge was 12%. In any case, if your total income of the cooperative society was more than 1 crore. More than 1 crore. In the case of the companies, the surcharge is 7%. If it is more than 1 crore but does not exceed 10 crore, and if it exceeds 10 crore, the surcharge is 12%. Am I right, sir? Now, the cooperatives you are saying that when you are giving a level playing field, why cooperative society is charged at 12% and the company is charged at 2 rates? One is surcharged at 7% up to 10 crore and surcharged at 12% after 10 crore. Up to 1 crore, of course, there is no surcharge. So now they have said that surcharge in case of a cooperative society, if they are not under 115 BAC, then will be 7% if the total income of cooperative society exceeds 1 crore but does not exceed 10 crore. And it will be 12% if it exceeds 10 crore. So the benefit level is for a company and a cooperative society. That is the only benefit which is given. But another benefit, in the case of a company who were not going for 115 BAA or BAB, they were paying tax in the normal say. The surcharge in their case was, they were allowed, they were covered under what you call MAT, minimum alternative tax. Minimum alternative tax is not applicable under 115 BAA or BAB. But other companies who are not opting for the new regime, the MAT is there and the rate of MAT is 15%. But in the case of a cooperative society, the rate of AMT was 18.5%, not only for cooperative society, all non-companies. That's the rate is 18.5% AMT. They have not done for any other, but cooperative society, they have given a level playing field, and AMT, in case of a cooperative society, provided they are not opting for 115 BAC, shall be 15% instead of 18.5%. That point, I am telling you, it is for cooperative society to bring them to the level playing field along with the company. This has not been done for a partnership firm. This has not been done for AOP. This has not been done for individual at all. AMT is there. AMT is there for others. 150 JC to JI, all the sections which are there. So that also has been done with it. So I wanted to tell you that also. Other point. I was all the time telling them, sir, what special provision you have given for surcharge? Because the surcharge is a higher surcharge in case of individual or HUF is 37%. Am I right, sir? 37% if the total income exceeds 5 crore. If it is 2 crore to 5 crore, 25% if it is up to 50 lakh, no surcharge, 50 lakh to 1 crore, it is 10%, 1 crore and 2 crore, it is 15%. You remember 3 items. They had brought down the surcharge. If your total income includes those 3 items, the surcharge could not exceed 15%. It will be maximum 15% if your total income includes that. Even if it exceeds 2 crore or it exceeds 5 crore. And those 3 items were short-term capital gain referred to in section 111A, that is listed. Long-term capital gain referred to in section 112A, and third was dividend. In these 3 cases, surcharge could not exceed 15%, provided If your income is more than 50, up to 50 lakh, no surcharge. 50 to 1 lakh, 10%. But 1 lakh and above. And if it is more than 2 crore, you will say surcharge will be 25. If it is more than 5 crore, surcharge 37. But for 3 items, surcharge would be maximum, what you call 15%. Now they have inserted, I told them, sir, suppose I sell a house property. I sell a house property on long-term capital gain. And it is going to be only in 1 year. I'm not going to sell it, I have income in a year. And because of that, my income may cross 2 crore or my income may cross 5 crore. I will have to pay surcharge at the rate of 25% or I have to pay surcharge at the rate of 37%. Whereas if that long-term capital gain is not there, I may not have that. So they have given a relief that all kinds of long-term capital gain, whether security shares under 12A or any other long-term capital gain, whether it is from share, whether it's for property, it is for land, but any long-term capital gain. The tax rate, you know it is different. 112A it is 10%. In other case it is 20% after indexation, no doubt. But wait, the surcharge in any case will not be more than 15%. Means if the total income of that individual ratio exceeds 2 crore, and it includes long-term capital gain. So long-term capital gain, the surcharge will remain 15%. For other income, the surcharge will be 25% or 37% as the case may be. But for long-term capital gain, it is not going to be more than 15%. So that point is also a good relief for those persons who, for no other rhyme or reason, this is not their regular income. This is once in a lifetime, they have earned income and they are supposed to pay surcharge at the rate of 37%. All the time they are saying, what is the use? What is the use? 20% long-term capital gain plus 37% or 27.4% plus 4%. It is more than 29%. So that was the point, the relief they have given. They really agreed to that. I'm really thankful to them, which is there. Next point. Sir, we had made a proposal when we were redrafting the income tax, saying that there is always a possibility of not showing an income. You may forget to show an income. Or you are an honest man. But somehow or other there has been omission. For any line of reason there has been omission. I cannot file a revised return after a particular date. Today the date is 31st December. Am I right, sir? Special case 31st March, otherwise 31st December. Belated return or revised return, the last date is 31st December. Clear? Now, but I missed it. I am an honest person. I want to show that. But there is no possibility of filing any belated return or revised return. What can I do? So we were telling them, if the honest man wants to show that income, please give him some window that he wants to pay the tax, whatever the interest is there. Please give him the window to file the return. The window has been given under section 139, subsection 8A, saying that you might not have filed a return at all. There are possibly you forgot to file a return, you did not file a return. Or you filed a return but there is some omission. And there is some omission but you want to show that income. I can't do it under 139.4 or 139.5 because the period is over. Now they've given a window that the term is updated return. You can file an updated return whether you have filed in the past return or not, or you have filed return under 139.1 or 139.4 or 139.5. You have filed a return but there is some omission. And you want to show that income. Please do that. File the return under 139.8A. Pay the additional tax under section 139.9. You have to deposit the tax, but tax has to be calculated as per section 140B. Newly section inserted 140B. Am I right, sir? You have to pay tax. How much tax? 25% additional tax. 25% additional tax if you file the return within 12 months from the end of the relevant assessment year. Or to have 50% of the additional tax if it is filed within 24 months of the end of the relevant assessment year. Very typical type of calculating the additional tax which is given under 140B and saying that even interest you will have to pay and this 25% is on additional tax plus interest. Am I right, sir? Additional tax plus interest. It's not that interest will not be paid. Interest you have to pay. Additional tax for interest has to be calculated whatever you have given earlier. You have filed a return, 140A is completed. So whatever under 140A completed, that has to be deducted. But wait here. It cannot be a return of loss. Wait here. You cannot decrease the income. Income has to be increased. Then only you are allowed to do that. Wait here. No refund on account of filing this updated return. Wait here. If it is under 132, your already search has been done, or there is a survey has been done, or books of account requisition have been done. No question. You cannot update that return. If survey has been completed, no return. If search has been done, requisition done, no question of revising that. And wait here. If the person, your assessment or reassessment or recomputation is pending under 148 or it is completed under 147, whatever is it, please do not allow to update the return. And if there is information under 1998, that is double taxation relief and that, and information has come from there, no question of filing an updated return. If it is on account of Benami, if it is on account of what you call money laundering, if it is on account of black money, not allowed to update the return of the last 2 year minded. Yes, but if it is on account of 148A and you have got a notice and still that assessment is not pending, a notice is that you can immediately pay the tax and file a return. Sir, am I right? You want to add something? Please do add it.
Sir, in this case, 148A is different, 148 is different. In case 148 notice has been issued, then he cannot go.
Wait. The 148 means assessment is not pending. The assessment is pending when 148 notice is issued or 147 is issued. Let me tell you. Assessment is not pending on 148A because you have to be given a show cause.
That's what I'm saying. In case the notice is issued under section 148.
148 will be only under 148A.
If it is 148 has been issued,
then it will be pending.
Or 143.2 has been issued? No.
So 132 has nothing to do with this.
143.2.
132 has nothing to do with this.
No, 143.2, if there is any notice under section 143.2 or 148. The scrutiny is
notice under 132.
Sir, 140
is not an assessment.
Sir, 143.2.
I'm telling you, notice under 143.2 is not an assessment. Even if I receive a notice, let me tell you, the question is, I am given an opportunity. The word uses assessment, reassessment or recomputation. These three words are used under 147. They are not used under assessment. That is, assessment is once you have not filed it. Use the word. Assessment, reassessment, recomputation.
Sir, assessment is section 143.
No. This is, read 147. Heading is assessment, reassessment, recomputation. That assessment is, suppose you have not filed a return income. Later on you receive a notice under 148. That is assessment. That is first time assessment.
So under 143.
No, 143 is not covered.
It is not assessment.
No. That is separate. ये heading देखिए, act देखिए, sir.
Yes.
You see the act. Please see the act and see 147 heading. 147 heading. Act, please.
No. Act का sir 147. Sir, here they also talks about recomputation or revision of income.
Sir, ये वही है. अब पढ़ो ना. 147 का heading. Chapter. Assessment, reassessment, recomputation. Achha, very interesting. When we discuss it doesn't mean that he is wrong or I am wrong. We are discussing. Anybody can be correct.
147 heading is income escaping assessment. 148 is issue of notice when income
is need inside.
Inside to each है.
My assessment, reassessment, recomputation.
Agreed. So 148.
First 147. If there is income escape assessment or reassessment or recomputation.
Agreed.
So these three words have been taken from this.
Sir, my question out here is, if the case has come up for normal scrutiny,
why is updated return? Even 148 days there, it's not pending, sir.
148
143.2 is not pending if you have received a notice yet. Sir, you have been selected for scrutiny.
So notice
I am not 143.2 is received by you. You want to update the return. 1 minute. 1 minute.
Yes, yes.
1 minute. There is a 143.1. Can I revise the return after 143.1? Intimation received? Answer is yes. 143.2. Even after 132 I can do it, but there is a now chance of penalty being levied. It is not assessment completed. Only thing is they can levy penalty that after receiving a notice under 143.2, now you are revising the return, which is not possible now. It was possible earlier. How the possibility is, only 3 months are there to get, and 143 notice will be given up to 30th June. So no possibility is not there.
Sir, again I am just saying, in case a notice under section 143.2 is issued, the assessment becomes pending.
Sir, will the notice under 143.2 will be issued by 31st December? No question.
कोई बात नहीं, sir, I am talking about updation of the return.
Sir, take it.
Can I do or not?
According to me, you can do it. Because the word used is for the assessment, reassessment, recomputation. One word for those 3 items given under 147. It's not under 143.
उसमें revision भी है.
हाँ?
Revision is not under 147.
Revision तो कहीं नहीं होता.
नहीं, 263 में होता है.
So let us think on that. But according to me, it is possible. 148 is also possible. If 148 is possible, why are you going for 143?
148A is just a notice to say that whether we should take it from 148.
Oh, 148 is after inquiry, they issue a notice to you. 148A.
The conclusion of 148A is 148.
148A is not a
Conclusion.
No, 148 is not a reassessment pending.
Sir, no, I am not saying that.
Pramod bhai, what will you do? In the interest of there is no end to discussion. There is no end to discussion. Come in. I'm really happy that you raised this point. I'm really happy. Now, since you raised the point, let me come to a very important point. Earlier, this 148 could have been taken at 2 reasons. 148 for 2 reasons. Flagging off by the risk management staff and then CID, final result. Entirely thing has been changed. One is the flagging word has been removed. Secondly, now it is not CID. Any word objection. Call the CID. Now they cover everything. Information in the objection of that. They have brought us to the same point which was there earlier. What is the use now? Earlier they were saying risk management strategy. Flagged up. Okay, I agree with the fact the word flagged up may be removed. But what about the second point? Second point has been divided in 3 more points. I'm really surprised. What were they doing earlier? They never thought of that. Or suddenly we said, oh, very good, this is not 3 to 10 years. 3 years, but there is absolutely no problem. 3 to, so there is another one. 3 to 10 years. What is the problem? Earlier it was representing some asset. Vinodji, earlier that the undisclosed income should represent some asset and that is 50 lakh or more. Now what they are saying, it can be expenditure also. It can be expenditure also on any event or any occasion. It can be, so they have covered everything. Anything also. So what is left there? So what is left there? Earlier it was only representing the asset, you can go beyond 3 years up to 10 years. Now what is left? Now anything, any entry, any expenditure.
Last year, it has been applicable 22-23.
Sir, that was applicable 22-23, it is immediate effect.
First year.
It is an immediate effect, sir. I am telling you, were they sleeping at that particular time when they made the law? And suddenly now they realize that there are 3 items to be given, not only the asset, everything. And it was only representing the asset. Am I right?
No, see that? No, they wanted to say that they have reduced time limit for 3 years and that's why they went canvassing. That this is very stringent.
Please,
now they have, and now they have removed.
So what is the advantage now? And then earlier you said you have to take approval every time. Now for issuing a show cause to you under 148A, no approval is required. Have you noticed this point? Yes. Clause B of 148A says no approval is required. Only thing, once you have taken approval, inquiry has been done and you have taken an approval, then you can issue a show cause notice without taking any approval of the higher authority. This also has been gone. So many things they have changed. Even faceless assessment 144B has been completely changed. Yes. I will have to take a lot of time to understand what is happening in that. So I can't understand what kind of things are happening around it. You make a law last year and you are making so many changes in the last year law. So what was it? You never thought of anything that way? एक चीज और बता दो मेरे याद आया, one thing very important. Earlier there was a proviso under section 143(3) that under 1023C, if the approval, if the AO said, I don't want to give you the exemption, under 1023C he had to refer the case to the higher authority, to the authority who had given the exemption to withdraw the approval. But that was only for 1023C. It was not for 1112. 1112 the power was given to the AO whether to give exemption or not exemption. Now what have they said is that even for 11 and 12, the registration has to be, if the registration you will have to apply, you will have to refer it to the commissioner, principal commissioner exemption or commissioner exemption to withdraw the exemption. And then only they can give, cannot give exemption, otherwise they will have to give exemption. Similar provision like 1023C, which was earlier there under proviso to section 143(3). Very important. Proviso to 143(3). The exemption may not be given to you. If the exemption is not to be entitled to you, you cannot say I will not give exemption. You will have to refer it to the authority who had given that exemption to withdraw that approval. Now it is not withdraw that approval, you will withdraw that registration. You see that point has been added under 143(3). These are the very important minor points which we were thought if there is absolutely nothing in that, there are not two tedious sections.
Benefit.
Which word benefit?
The benefit for medical and other things. That
Medical benefit I have already told.
only we have discussed.
Which one?
TDS on 194R.
I'm coming to that. TDS on 194R and 194S, I'm coming to that. 194R is a different thing altogether. You know that under section 28, value of any benefit or perquisite or any other amount received during the course of carrying on a business or profession is treated as income under the business and profession. That are very clear. That one benefit you are given, it is your income. Now the question is how to monitor, as rightly pointed by the BTC chairman, that how do we know that benefit has been given? Although in Form 3CD, you have to give mention that if there is any benefit which has been given to that, but most of the time they skip, they don't tell you. You know, they have taken you to Singapore to take a visit, or they have taken you this, they have given you a TV, they have given you this benefit, they have given you this benefit to the dealer on account of a target sale. And you know, a price is given to you, a signaling is given, some target sale, some ship, in kind. It was not being taxed. Now, it is taxed no doubt. But now, since 194R was introduced, there will be a TDS on that amount and monitoring will have to be done, and immediately that will become an income which is taxable under Provision 8. Earlier you used to skip it, but now provisions of 194R, who will have to deduct the TDS? The person who is giving this benefit. The person who is giving this benefit is now under, because he is going to claim deduction on account of it. Person who is going to give this benefit of the perquisite or anything given in kind, like car, free car given or two, now he will have to deduct the TDS on the value of that amount on which amount. This is 194R. This is an important point which is there in the 194S also. We have already done 194S. 206AB or 206EA, which was introduced, that non-filer of a return for the last 2 years will be liable to pay tax at the, double the rate of TDS. But that has been reduced from 24 months to 1 year. Because now information is there with them, so it has been reduced because now updated return can also be filed. So this has been reduced to 1 year. That point is also very important. Another point, 158A. When we were discussing at that time, you told it is only for the department. No. Either department or me. If there is a question of law and which is pending in the court, High Court, there is a question of law which has been decided. And now my issue, earlier under 58 you say, if there is a repetitive, to avoid the repetitive appeal, if I give an undertaking to the AO, that whatever decision is taken in that court, in that case, which is pending before the High Court or Higher Court, I will agree to that. So let me not file an appeal again and again. That was there. And then the department also got a proposal under 115 AA, if I am not wrong. The department can also say that there is no point of filing a repetitive brief on the department side if there is already case pending in the question of law. Now what have they said? If my case is pending and your case is also based on the same question of law, you can also say there is no question of filing a repetitive brief. That was under 115A. And department also given authority that if there is a question of law which is pending, they can also say, please, we will not file a return of appeal again and again because that question of law is already pending. So this type of thing, for anybody, earlier it was person specific. Now it is not person specific.
And in this case, after that High Court order, we can file an appeal after 60 days.
Yeah, of course.
After that order.
After that.
And yet another case, supposing department does not file appeal in my case, because they are going to lay on some particular case, can I...
They have to file the undertaking.
Exactly, they will file the undertaking, but can I argue my that case, because it is legal point. So maybe notice
If you are arguing, you don't want to give, you can always file appeal.
I'm not saying filing of appeal, I am saying that since the case question of law is similar, can I get opportunity to also argue in that case? Because that will be better, because the other associate may or may not put all the points. Like by 5 points.
Whosoever wants this benefit has to file an undertaking that whatever decision is taken in that case will be binding on me for others also, both sides. But earlier it was a person specific. Now it is in general, so anybody issue specific. No, person specific. In my case is pending, I may not file repetitive appeal. The other person cannot take benefit of that. Now anybody can take the benefit of it, according to me, which I have done. Because after seeing Pramod ji, I really get afraid because he may be having some other point in mind. So please do that.
Sir, in this now issue, I would speak.
Sir, these are highlighted. I have not read in detail.
Of course, we have not, none of us has read completely. So, sir, in this case now, what happens, because they say after the High Court order, we have given an undertaking, we'll follow, but this still, there is an opportunity given to file an appeal after 60 days. So what is the benefit of giving the undertaking?
If that goes against you, you have not filed an appeal, how it will happen now?
So that is what I'm saying. Now suppose a department has waited for this, they have filed an appeal and it goes against them. So still they can go and file an appeal after 60 days. So it is only just postponement of the litigation.
Yes, then you may not have to take a step again and again, and you can wait for some time. If the question of law gets settled, need not get settled.
So
if they don't take it,
so if it goes in the benefit of department, I'll go. If it goes in my favor, department will go in.
Yes, that is. Yes, that is the point. That point, of course, is there. Now the point is, what else we were there in the complete 37. 37th of talks earlier they had given some offence. They have expanded the scope and given in different form, putting 1, 2, 3. Earlier it was only jumbled in it. It is specially given under 1, 2, 3. Points are similar under 37 that you cannot take an expenditure because if it is offence or it is prohibited by law or that, they have been bifurcated into that. That's all.
There's one point added out there that if the penalty was there paid outside India, that was not covered. So it was only domestic laws. Now even foreign laws, the penalties paid, that is covered.
Agreed. I escaped this point, but I agree. This is there. Any other point which we want to discuss? 43B. 43B is nothing, sir. Earlier, what used to happen is, suppose there is some interest there. I convert this interest into loan. And when I convert this interest into loan, people used to say that my 43B should be allowed to be because I have paid it. They said, no, this is not paid. Converting the interest outstanding into loan is not a payment. Outstanding into loan is not a payment. Now then they used to come out with another word. Listen, but it is already a payment because debentures have been issued in lieu of that. It's not a loan converted into loan. I have issued debenture. They said you issue any debenture or any other thing, or it is converted into loan. It will not be treated as payment under section 143. 3C, 3D explanation have been amended to include that conversion of interest and loan is not deemed payment. Similarly, conversion of interest into a debentures or any other liability will also not be treated as deemed payment to get a benefit of that 43P.
272A.
No, before that, sir, 272A you are mistaken. There is 234G there, 234H there. That is remains 100 rupees. 272A is only certificates of the 500 rupees per day.
No, sir.
Read. Please read.
The 272A, if I talk about, there is a whole list.
No, sir, that has been abolished, that point of return, quarterly return. That has come under 234G and H and 234A. देखिए.
To furnish the due time of any return, statement or particulars mentioned under section 133 or 206 or 206.
These are other certificates. There's nothing to do with quarterly return. There's nothing to do with the return.
It is only return. Certificate अलग ही
Sir,
return.
before you grant it was came higher, if I'm not wrong. Read. What is 3234 FG? Fee. What is fee? Where the fee was there, 272 is abolished for that.
LM तक है सर ये.
K वाला देखिए आ गया.
GHIJK.
हटा हुआ है?
नहीं सर.
Sir, you do, please come to 234 FGH. The fee, wherever there is fee, it is not covered.
P
500.
day, sir.
Wherever there is 100 rupees per day, please note, under 272A it has become 500 rupees. Agreed? But come to 234 FGH, where it is 100, that remains 100. For late filing of quarterly return, late filing of this, that remains 100. Come to fee. Please see the fee.
Sir, I am not talking about fee, it is penalty.
Sir, when there is fee, there is no penalty.
No, sir, fee is separate, penalty.
Yeah, penalty 100 rupees, it was minimum up to 1 lakh rupees. Remember
that is separate.
100 rupees per day, maximum 1 lakh 272A. 272A does not about quarterly return. It talks about certificate TDS, not an issue.
It is for failure to answer question science.
No,
sir.
Failure to answer is 10,000 rupees, sir.
Sir, उसके लिए 10,000 है, पर बाकी सबके लिए 100 rupees per day.
अकेले certificate these are certificate of TDS, certificate of TCS and all.
Late fee अलग है, penalty अलग है. Penalty क्या
So
है?
wherever there is a fee, there is no penalty. Yes. Please note, where there is a fee, there is no penalty. They have removed it. They have removed it.
Section में तो
please see to that FGH. Where there is penalty, there is no fee.
Okay.
Those have been demolished. That way. Any other, sir?
Sir, we have received questions. I think related to direct tax. Satish Gupta ji will ask. Related to international he will ask. I will start only with first query from abroad, which has received from Balaji Abu Dhabi. He has said that, sir, while calculating income from sale of transfer of crypto, whether the computation is based on transaction wise or script wise,
we have already discussed this. We have already discussed this. Am I right, sir? We have already discussed transaction. But according to me, let us see. According to me, that should be the total income of a year. It cannot be item by. According to me.
Okay. What I will suggest, you take one query, then after he will take a couple of queries so that we will have on both sides.
But who has to answer that query?
Sir,
only one person has to answer. Arvind ji from Bareilly, 56 to 10, whether threshold limits of 50,000 abolished?
Whether?
The threshold limits of 50,000 has been abolished now.
Where is the threshold limit of 50,000 abolished? There is nothing about it. It is only for payment from the payment to the family of the deceased. Where the limit is 10 lakh. Otherwise, it is 50,000.
have you identified Satish?
Yes, sir. Sir, it's really a matter of pleasure to be here in the presence of Honorable Giri sir and to hear the budget provisions in such a wonderful way. Sir, from Pondicherry, Ranganathan Ravichandran has asked 2-3 questions, but I will take only 1 or 2, sir. He is asking that amendment to section 68. He is asking that whether it has to be established by SECI.
Whether it has to be?
Funds has to be established by the SECI source of source.
Source of source, yes. There is a proviso which is reserved. Earlier, that proviso was only in case of a company when they receive their share capital. Now it is for any loan or borrowing or any other credit found in the books of account, you have to give source of cost. Now it is complete source of cost for everything. Even for gift it will be source of cost activity.
Right, sir.
Even for gift it will be source.
Next question is, sir, he is asking 139.8A. He is asking that suppose assessment in 2015-16 return has not been filed. How it can be filed?
Well, no, 2 years only, 24 months, not beyond 24 months. And end of the relevant assessment.
Thank you, sir.
Now you want to take it for 10 years, no, it's no question. Only 2 years updated.
Deepika from Chennai has asked with the cryptocurrency received as a gift to be
Taxable under 56(2)(10), they have changed the definition. That if you receive the cryptocurrency or anything will be a movable asset. It is virtual digital asset. Earlier in the case of movable asset, they had taken only shares, security, jewelry, or architectural collections, a painting, drawing, sculpture, work of art, or brilliant. Now they have added this item also, virtual digital effect if received in a gift, and if it is more than 50,000, it will be taxable. In the
and therefore he was asking that whether 50,000 limit is there.
That's what 50
Kamal Kumar Rathi, Sikandrabad is asking, sir, digital currency issued by RBI will be cryptocurrency?
They have already excluded Indian currency and foreign currency. Now, will that be treated as a currency? Then it will not be crypto. That is digital rupee. That is not there. That is going to be digital rupee. It's not a token or that is instead of paper currency.
Although it is on a blockchain basis, but
it should not be called virtual digital asset.
Right, sir.
Because they have excluded Indian currency and foreign currency.
Jatin Minocha ji ka question है from Delhi. WDV of goodwill amount regarded as transfer. What
when you reduce from the block,
then
it is transfer.
Reduce from the block. So
when you are removing the goodwill from the block, it will be treated as transfer.
So it will still remain in the hands of the company. Still you have to do taxation.
But this is only for the purpose that if you are if you are taking the goodwill deduction and you are taking depreciation on goodwill, now it is in your block.
Block of
asset.
For slum for WDV or for the slum sale.
Block of asset. So you are removing from that. They said RUDB is not a transfer. They said if you are removing from there and goodwill is there, you are not entitled to any depreciation on that amount. So how are you transferring it? That the word transfer, it has no technical meaning in that case. It is only for technical purposes that they think it's a. Because you are not going to be taxed, because you are not going to get depreciation in future. It is not going to get depreciation on that.
Sir, Anita from Mumbai is asking about 14A, section 14A, sir. What is the change?
14A, what used to happen is that we have said that if there is no income which is exempt, but you have incurred expenditure, what was happening of that expenditure? Because there is a rule, if no income is earned and an expenditure is incurred, that should not be allowed. But they have been saying that since now exempt income is not there, so that expenditure should also be allowed. They have clarified that even if the income is not there, if there is expenditure relating to that, 14A में उसको disallowed.
That will be disallowed. And Sunil Kumar Jain is asking again, intellectual property is virtual digital asset? No, I think. Intellectual property.
They have defined what is virtual digital asset, you have to take only that.
Prakash Sinha ji from Delhi asks, sunset clause of 115 BBD, then where it will be taxed?
150 BBD is elected. Whatever, if you are holding more than 26% share in the subsidiary company outside the country, you are receiving dividend. It was being taxed at the special rate of 15%. Am I right? We have given that benefit. Now what has happened is the Indian company said when it is received from an Indian company, you are taxing the full amount. And when it is received from foreign company, you are taxing only at 15%. Although you are giving the benefit of tax credit also. And in foreign countries, suppose it is taxed at 15%. Again the money you have here, you will give the credit, nothing will be taxed. We have given you one benefit under ATM, that if you receive it, you distribute it, we don't pay tax. But if you receive it, you pay normal tax and take the credit of whatever tax you have paid there. So now, many cases what happens, I am receiving subsidiary company, I am not distributing it, but I am not paying tax because I have already paid tax in it. Foreign country 15%, I am getting 15% credit here, so they were not paying tax. They said, look here, you will have to pay tax on the normal rate, you get the credit only what you have paid here. So that is the reason 150 BBD has been abolished.
Srijil Kumar Senapati ji from Rourkela asks, TDS even on loss on transfer of digital asset?
Yes.
Sir,
Yes.
TDS even on loss of sale of digital assets.
Loss has nothing to do with this. It is a sale consideration price on which you have to deduct the TDS. But they have already said when you deduct TDS, it is only on the difference amount. TDS will be on gross amount of. Let us see. 194S, what is it? Gross amount. Yes. Hey, 1 minute, sir. Let me see. Taxability on that amount.
Any 194S.
Consideration. I am not sure.
Sir, consideration.
Complete consideration. Other loss of profit, whatever is it, you will have to take TDS and take a fund of that.
Sir, interesting point
If
there.
I have a question, because you have to report income in your return, now loss you are not allowing you to return, so that will be technical issue for VTB.
Sale item.
You are pointing out that I have shown an income and I will have to show loss, but I will not be allowed to set up the loss. That is the point. We will have to show the loss somewhere, but not set up.
So the thing is, anyone who is buying such virtual digital asset will now have to take TDS number.
They have to
Take TDS number.
sell create. Buying. It is the seller who has to deduct.
Sir, buyer will deduct. He is making the payment for the consideration.
And here interestingly,
तो सर जितने सेपरेट पर्सन ले रहे हैं सब TDS नंबर लेंगे.
what you would लिखा हुआ those who are in the business. No, they have given it.
नहीं सर.
They have given it. That those amounts are liable to be audited under 4480.
They have given specified person means in case he is into business, then 1 crore limit, and if he's not in the case of business, then no limit.
And it's okay. You will have to take because you are doing it.
So number of TDS.
Maybe they come out like 194 1A. They come out like that. And in 194 1A also there is a change. Let me tell you. That change is you deduct 1% of the actual consideration. Am I right? Stamp duty value was not considered. Their stamp duty value was not. Now it is higher of the stamp duty value or actual consideration. You have to deduct 1%.
And in this, we have Balaji is asking if the app is selling this cryptocurrency.
Who is selling?
App. There is no person, physical person. App is selling this cryptocurrency. It is not known who is selling. So in that case, how to have this section enforced?
Sir, point is, app is selling, the app has to pay the tax on that. Nobody will be allowed. Seller has to pay tax.
And they have also clarified out here that in case 194O and 194S, 194S would prevail.
Yes. It is there.
So this.
Sir, you have to read it. So much of changes. And I have done it so much of time, but you can't expect every little white pen will also be there. Sir. Let us read that. Any other questions?
And we have also invited Ahuja sir on 5th for detailed
That time you can ask any question of any nature. Let me read it at least.
Satish bhai, whether you have received any more questions?
We have taken almost all questions, and I think some of our suggestions which we will take care of in our committee. I think no further question.
So you may proceed forward.
Thanks. Honorable Girish Ahuja ji, to whom we always say the guru of the profession, and I can say the stalwart in the direct taxage, and he is always a person who inspires us. Shri Chisle ji were the chairman of the direct tax committee. Shri Pramod Jain ji were the chairman of the international tax committee of the ICI. Our own Advocate Vijay Kumar Jhalani ji, government nominee ICI, my dear friends who are attending this wonderful seminar virtually. A very good evening to you all, and I am really thankful to the Finance Ministry, Government of India for giving us this opportunity every year when we invite Honorable Girish Ahuja ji and listen his views, and very distant views I can say, on the budget provisions. It is really very difficult to give the opinion, and that to expert opinion, and that to an opinion which can run in the courts of law just after few hours of the budget. And friends, we saw in this budget that they have made the amendments in the name of intent of legislation, some enlargement of provisions of section 148, 68 extension, and there are certain provisions, certain reliefs are there, but I think this budget is really, as rightly told by Girish sir, a difficult budget and having a very big impact for all of us in the times to come. So I would like to pay my heartiest thanks to Girish sir for sparing his valuable time today. And I know that he has some other meetings 7 p.m. onwards and he has to move also. So thank you very much, sir. Hearty thanks to you for being here. My thanks to my chairman and chairman International Tax Committee and Vijay Kumar Jalali sir for presenting here throughout the meeting. Thank you very much, sir. And thanks to all my dear friends who are here amongst us and are taking part in this wonderful seminar. Thank you very much. Thanks a lot.
Thank you. And I also recognize presence of our Honorable President, C.A. Jambu, Honorable Vice President, C.A. Devashish Mitra ji, and Honorable Chairman of GST and Indirect Taxes Committee, C.A. Rajendra Kumar P, and of Sustainability Committee, C.A. Dr. Sanjeev Singhal. They were also present and participated. So their thanks are also due to all of them. Thank you very much. Thank you.